Hey, what's up everyone? Welcome back to my world of stocks. And in the last video, I gave you guys 3 dividend stocks that I am in love with right now. But I also mentioned that I'd give you another bonus 3 dividend stocks in the next video too. I'm actually recording both videos on the same day, but this one's going to be posted a little bit later. So hopefully the prices are still mostly accurate. I'm sure they will be. But anyway, what I didn't mention in the last video is that these 3 bonus stocks are actually going to be REITs. And not just that, but they are my 3 absolute favorite REITs in the entire market. And they just so happen to be down a lot right now with some mouth-watering dividend yields that I think look extremely attractive for the long term. So I'm buying these stocks right now myself, and I can't wait to share them with you too. So let's go ahead and just jump straight into it. And hey, what better way to kick things off here than with my overall favorite REIT in the entire market? I'm talking, of course, about Extra Space Storage, ticker symbol EXR, who's currently down over a third of its entire value from the top. And I gotta say, I absolutely love it at these levels. And here's why. Now, first of all, it would make sense that out of all the different types of REITs out there, companies that, own real estate and then rent those properties out to customers, that my favorite among all of them would really be one in storage facilities, because that's just about as safe as you can possibly get in that specific market. It's immune to the retail apocalypse and e-commerce because it's not retail. It's immune to the internet because you can't just replace physical storage facilities with some digital version of them in like the metaverse or something like that. And it's even somewhat recession proof too, because even during those times of financial hardship where people are, making all kinds of changes in their lives to save money, like downsizing their homes or getting roommates or even moving in with their parents or maybe even moving to a cheaper state. If you're ever doing things like that, well, it can actually help a lot to have a storage unit where you can put all of your stuff in the meantime until things improve for you. Like say you move in with your parents to save $1,000 or $2,000 on rent. Well, by comparison, spending just $100 on a storage unit to be able to save like $1,000 a month, that is an excellent trade-off. And even when things improve and you're doing well with money, people still want to save space with a storage unit, which, by the way, it's a very sticky business because once you fill up a whole storage unit, you might just hold on to that unit for many years simply out of convenience. Like nobody wants to bring an entire storage unit worth of stuff back into their home and crowd up everything. So those that can afford it just keep the unit anyway. Growing up with my mom, we had a tiny apartment that we kind of supplemented by renting a little unit, a little storage unit ourselves too. And we loved having that thing. In fact, my mom still has that storage unit, even though I moved out a long time ago, and she could have the space for stuff back at home, but she still just loves having an extra storage unit for that extra space. And I don't think she'll ever want to get rid of it. But look, even with on the commercial side of things too, I'm not just talking about consumers, but commercially, you look at like the rise in remote work, where we've now seen many office REITs get crushed because companies don't want to pay for all that office space anymore. Well, many times those companies will actually store a bunch of their equipment in storage facilities too, which, by the way, EXR even offers larger units for that very purpose, with even truck delivery access, large truck, semi-truck delivery access too. And so because of all this, we've now seen the percentage of self-storage usage climb every year, resulting in storage REITs producing the second highest returns of all, only behind data center REITs, which have the advantage of, exploding in popularity and use in recent years because of the rise of AI and cloud computing. But storage units are right there too, performing incredibly well for not having as big of a rise in popularity, recently. And so as the clear market leader in EXR with the most market share and with some of the highest occupancy rates out there, well above 90%, coupled now with a beaten down stock price that has sent the dividend yield soaring to almost 4.5%, which is among the highest levels it's ever been at, by the way. Well, yeah, you can be sure that I am buying more of this dividend paying REIT while I still can. And it's really my favorite in the entire market. Having said that, coming in at my second favorite REIT, well, it's another one with properties that I just can't ever imagine them not being utilized to pretty much their max capacity. And that's because Vici Properties, ticker symbol VICI, specifically owns gaming and resort properties, including some of the biggest in Vegas that are absolute cash generating machines like Caesar's Palace, MGM, Mandalay Bay, and more. These are insanely profitable casino resorts under very long term contracts that are extremely sticky because of how hard it is to relocate at that already massive size and with the strict gambling regulations that they face. Well, the results being that Vici typically generates much higher rent per asset, much longer lease terms than compared to their rivals. They have much higher barriers to entry. They have much more growth with rising funds from operations and much lower cash flow volatility, none to date really, with pretty much always 100% rent collection, which is incredible. In other words, this is one of the most reliable REITs that money can buy. And yet, because of high inflation, high interest rates, and a generally kind of weak macro economy in recent years, the stock price has actually been fairly suppressed for some time now, resulting in a mouth-watering dividend that still yields over 5.3%, with a remarkably low payout ratio too, meaning that they have strong cash flow coverage, while their growth strategy relies more on external funding rather than just retained earnings, something that I don't mind for a younger REIT like this. So overall, I just think that there's a lot to like about this one, where it currently trades, and it's why they are my second favorite REIT, only behind EXR. While this last one might be my third favorite of the bunch, though, it is still a fantastic REIT in its own right, and it's also my newest pickup of the bunch too, and one that I am very excited to build up larger over time. And that stock is, of course, American Tower, ticker symbol AMT, who's now lost about a third of its entire value from the top two. So why am I buying this one? Well, the answer is actually very simple. I love their business. I love that the stock price is lower now, and I love the dividend. Now, business-wise, you're talking about probably the largest telecom REIT in the world. I mean, it's a company that owns around 150,000 cell tower and communication properties globally that they then lease out to big wireless and even fiber communication providers under long-term contracts. That's a big thing. I love these long-term contract REITs, which they're now even adding multiple tenants under each property, resulting in double-digit growth for both their sales and their profits, despite their already large and well-established size, because they're finding more ways to utilize those properties. And I love to see that. They're being even more efficient. Plus, they're even a big play on artificial intelligence too. I mean, it's incredible. And that's through their data center properties, which will only become more important in future years. So you've already got a great business as it is. Plus, you even have some future growth potential too, because they're finding ways to be more efficient, and they're even investing in other growth areas like AI and data centers. And overall, I just can't imagine any of those markets really ever going away because of the rise in data usage and smartphones and cloud computing and smart cities and AI and the Internet of Things and everything else that relies on AMT's valuable, communications infrastructure. So I believe the demand will always be there for what is, again, a market leader, just like the other two I've mentioned so far. And yet, like the others, it's also down huge, which sent the dividend yield rising to one of its highest levels we've seen from them, not only above 3%, but also with a double-digit growth rate and growth years, meaning this isn't just a great value dividend stock, but I also think it's a great dividend growth stock as well. Get a little bit of both. I think more value, but some growth there as well. Now, I don't really see what there is not to love about this stock. And for me, I'm going to keep buying it at these levels again while I still can. But hey, that'll do it for this quick video, guys. Let me know what dividend stocks you guys like out there. I'm actually thinking I'm going to do a video maybe on like 5 dividend stocks that my viewers are buying. And then I'll kind of give my opinion on them and rank them from best to worst. I think that'd be fun. So let me know what dividend stocks you guys like out there if I didn't mention it, and maybe I will include it in a future video. So anyways, just a thought I had, but thanks again for stopping by, my friends. Thank you for all your support. I hope you're all doing well out there, and I will catch you in the next one. All right, take care, everybody. Bye-bye.